Good morning, good afternoon, good evening, and good night, wherever you may be. My name is Gareth Soloway, and it is always a pleasure to be with you here on Wednesday mornings, 9 a.m. Eastern Time for the game plan. So, we're going to get right into the charts. You guys see it here. I have obviously only about 20 minutes. I do these for 20 minutes every Wednesday morning. So, I want to get right to the nitty-gritty information. So what do we have here? Look at Bitcoin. Now, the reason this is important, and by the way, if you look at this chart, Bitcoin's barely moved over the last couple weeks. But what's intriguing about Bitcoin here is that we rallied up into this pivot high, right? So if we look at resistance, see this high from April 14th, it was 31,045, let's call it. Well, we pierced it here. We pierced it here. And then just a couple days ago, we closed right there after piercing. And then look at the selling taking place. So what this is telling me is that Bitcoin is having a very hard time breaking out. And the concerning factor here is that this was and maybe is still bullish consolidation on the chart. But the problem is it should be at a point of breaking out. And it's not. And that makes me concerned that you look at the downside level of support, which is 29,900, 850, and we might be headed back down there. Now, if we break that and we have a daily close below that, so basically this line right here, that basically creates a failed bull flag. Failed bull flags mean that you can potentially have a major move to the downside. So again, let me recap the analysis on the Bitcoin chart here. So number one, Bitcoin failing again to break out. And for those of you that know the methodology, the PPT methodology that I teach in the Winning Trader series, we know that this is a 2x time count. Time counts are very important in charting. So again, for it to fail and not break out on a 2x time count, that is significant. All right. So again, as it comes down here, can it hold this 29.8, 29.9 level? Does it close below? A close below potentially means very bearish price action on Bitcoin. If it can rally up here and close above 31,000 or 31,001 and change, whatever this high pivot is here, that again will be the precursor to staying above for a few days and maybe having a breakout. But right now, this price action is not good. And I want to say this. A lot of people, again, if you go on crypto Twitter, if you go anywhere, there is so much bullish sentiment out there on Bitcoin that you would honestly, if I just looked at crypto Twitter, I'd be like, oh man, the Bitcoin must be near the all-time highs. That's concerning. Another thing that's concerning to me is that if you look at the NASDAQ, all right, the NASDAQ has been going up nonstop for how long? I mean, look at this chart. And again, I have some other data on this, but nonetheless, we've been in an uptrend on this, not only since October of 2022, but look at the recent price action, right? And again, to not see Bitcoin performing better in that environment is somewhat surprising and potentially a bearish signal. So again, just be aware. Now, I want to talk about altcoins. First of all, let's go to the Bitcoin dominance chart. And we're going to get right into stocks. We're going to get right into commodities. I want to cover gold today. I want to cover various key stocks. In fact, I have something big to talk about Tesla as well today. So we'll get into that. But basically, when we go to this chart here, this is a Bitcoin dominance chart. We can easily see it was a breakout, right? This is, by the way, this is what should happen with Bitcoin. All right, this is the sideways consolidation. It tested, well, almost tested, and then it broke out. So that's the perfect scenario for Bitcoin, right? To repeat this chart on the Bitcoin dominant. Basically, and remember, charts replay out over and over again. You'll find this same consolidation on 1,000 other charts out there. And again, the probabilities favor a breakout. If it doesn't break out, that's where you get a failed move. And failed moves in technical analysis result in major moves in the opposite direction. So the reason why I'm bringing up that 29.8, 29,900 level is because if we fail, if the bullish pattern fails here, you should expect a move to at minimum 25,000, maybe as low as 22 to 20,000 on Bitcoin, probably within a month or two. So that's, again, for those of you that are watching, like if someone told me they were long Bitcoin right now, I would say, okay, that's okay, as long as you understand where to exit that. Now, when we go to the Bitcoin dominance chart, this pattern is a little bit negative in the short term. Now, remember, I'm talking very short term. Bitcoin dominance longer term has broken out of the bigger pattern. So again, Bitcoin dominance to me is heading much, much higher. All right. Ben Cowan and I have agreed on this. We've done our show, The No Shill Zone, which is Monday mornings at 11. But basically, you're headed here to approximately this 59, 60% level, right? There's a big level here as well. So this is where Bitcoin dominance eventually will head. And you guys know I'm a long-term bull on Bitcoin. I love Bitcoin longer term. I'm just a very short-term trader. So if we go to this pattern is known as a bear flag. All right. Big move down, inside bar consolidation. What that tells me also is that the likely move for Bitcoin dominance in the short term is to the downside. So again, you may see alts hold up. Now, by the way, it doesn't mean alts are going to go up. It just means alts may hold up a little bit better because they've been hammered than Bitcoin does in the near term here if this bear flag plays out. Now, interestingly enough, I want to show you this. If we look historically at Bitcoin, what do we see here? Well, we see that here was a low from about 40% of dominance. It rallied to 45% and then consolidated and then broke out. Here, we went from 43% to 48%, another 5% in dominance, and then it consolidated here. So what did we do here? It went from 47% to 52%. That's 5%. So again, 5% dominance increase, 5% dominance increase, 5% dominance increase, and then consolidation, consolidation. And again, overall, even if it goes a little lower, which is what the chart's telling me, it's consolidation. Do you guys see what I'm saying there? It's actually pretty cool on the charting side of things. So it seems to me that Bitcoin is in a pattern of 5% incremental moves on dominance before it needs to consolidate. That, again, is what I'm seeing here. Now, if we go to some alts here, take a look at Cardano. Cardano, look at this. Resistance, tested it here, tested it, and now pushing back again. So you're seeing how the alts have seen bounces off of their lows from when we got the SEC news. But again, the alts continue to pull back off of resistance. Now, in the best case scenario, this is where Cardano could head. That's my best case scenario, folks. So again, to look at this, I have a trade signal long on this. We're in the money slightly on this. I do think there's one more chance at a potential breakout, but we're not looking for a huge score here. It's upside to this downsloping trend line. Then it's going to meet a lot of resistance at that point. The overall bigger picture, by the way, what's the bigger picture? What type of pattern is this? This down move sideways inside bar, it's bearish. So again, you want to see this pop through here in the next, let's say, 3 to 5 days, and then look for eventually a breakdown lower. All right, I want to move on. Now, this next segment, we're going to talk about Twitter, guys. Twitter beat deliveries. I think it was on Sunday, the first of the month, they announced. They beat deliveries. The hype was incredible. Elon Musk, the genius. And listen, he is a genius. I'll be the first to say that. But this is a problem. This is what people are not understanding. There's two factors. Number one, the chart's into resistance. Look at that. Pivot high, pivot high, pivot high. Pull back eventually to this line. All right. So again, listen, where it goes after that line, maybe it goes way up after that line. I'm just telling you that the chart needs to retrace to the scene of the crime. All right. So you're looking at downside to about $225 on Tesla. Now, number two, you have to look at how they achieved their beat. They cut prices on their models by up to 20%. 20%. Now, if I have services, I have Verified Investing Crypto at verifiedinvesting.com. I have Verified Investing Alerts at inthemoneystocks.com. If I cut prices by 20%, do I think I could boost my sales numbers too? By 5%. By the way, they beat by 5%. And the answer is yeah. I mean, oh my God. If I had a 20% off sale, there's no doubt I could boost my sales by 20% or 5%. So yes, that makes sense. The problem with cutting prices is it's very hard to raise them back up. People get used to the new price. They buy what you're convincing people that maybe couldn't afford to buy. Once you do that, you're going to run out of people again. Do you cut prices by 20% again? Do you cut it by again and again? My point is it's unsustainable. So that's problematic. All right. You shouldn't have to cut your price to increase sales, or if you do have to cut your price to increase sales, there's a bigger systemic problem there. And I think that's competition. Now, this is where things get even more interesting. So we have to understand what is going on. Tesla's deliveries, and this may shock some of you guys. Tesla deliveries were over 50% of those deliveries went to China. I repeat, over 50%, that's over 5 out of every 10 vehicles went to China. Now, what's the issue here? And this is the risk that, in my opinion, a lot of these analysts, like Dan Ives, great analyst, but they're not quantifying the risks here. All right. So let's go back to China real quick. China over the last couple days, they said they are going to curb the export of rare earth metals that go into semiconductors. This is a response to the US saying we're not going to ship a bunch of AI semiconductors to China. In addition, China now has just come out and says that the US is making Taiwan a powder keg because of essentially military equipment sales to Taiwan. Basically, what I'm saying here, guys, is there's a tit for tat going on, that there is a risk of it exploding into something bigger, a bigger trade war. Well, there's an issue for Tesla here. Tesla, again, sells more than half of their cars to China. If that explodes, if the US-China relationship totally explodes, let's say China invades Taiwan, Tesla's price could drop by over 50%. Now, that might only be a 5% chance of happening, but that's not being reflected in the risk of owning Tesla. Like when you hear analysts talk, you are not hearing like, oh my goodness, what if this long shot happens? The other thing to understand, and this is something that I guarantee you have not heard from any other analyst, is that if the US government recognizes, and I'm surprised this hasn't happened yet, that basically China controls, essentially, if China banned the sale of Tesla vehicles in their country, Tesla's stock would fall by 50+% in theory, right? If 50% of their sales or over 50% are going to China, you would have to assume that their price would fall if that happened, if they got banned from selling there. Think about this. Elon Musk, he's worth $216 billion. If Tesla fell by 50%, Elon Musk, I think, would lose about 30% of his net worth. Elon Musk owns Twitter. What is the power that the Chinese government potentially has on it from a U.S. security, national security risk for or over Elon Musk's head, controlling that much potentially of Elon Musk's net worth? Think about that, guys. You're talking about like $50 billion plus of Elon Musk's fortune is now resting in the hands of China sales of EV vehicles. And again, he also controls one of the biggest platforms for getting information out to the public, to the US, to the world. So think about that. Again, just throwing out information. I just put the facts in front of you, and you guys take it and make what you will of it. That's all I want to do here. Make you think outside of the box so that you can be aware. And again, maybe it never comes to fruition. Maybe maybe China and the US make up. Maybe we become best buddies again. But as an investor, you have to make decisions based on all factors, not just hopes and dreams. Hopes and dreams are great, but when it comes to investing, that can make you lose. All right, let's get on with it here. Let's go to the overall S&P 500. Here we have the S&P 500, which again, by the way, this morning is lower. And for those of you that don't understand cycles, we did just have a super moon, I believe, just a couple nights ago. So again, that can be sometimes a turning point. in terms of its effects on us as humans. And again, I'm not going to get more into cycle work than that. But one thing to keep an eye on, your max upside is getting very close. Look at this upsloping trend line. Look at where we went to it. We pulled back to this support line here, which happened to be this high. We then bounced. Do we touch it again? Do we roll over? And do we break this line? Now, if we look at the NASDAQ 100, the NASDAQ 100 is at dual points here. Channel to the downside. Look at all the pivot lows, pivot low, pivot low, pivot low, pivot low. Okay. Then right here, we clearly see we hit the line here, which was a dual pivot right there and here. And then your pullback occurred. We're right back into that level. All right. So again, we're very close to, in my opinion, a big test for the markets. Can they continue their rally and break out? Or if we start to sell off, watch this level on the Qs. So essentially what I'm saying to you is that if you can get above on a daily closing basis, the high point here of 373 on the QQQ, you can get another leg up, potentially, maybe 390 even. If, on the other hand, you break lower and you break this low, you then start making lower lows, and this could still be a lower high. Lower lows and lower highs, price is going to head lower. All right, so again, I'm basically giving you a game plan here for knowing which way the market is going to go. You're right near the top range. Again, a daily close above 373 would be bullish. We're at 370.30, so I mean, basically, we're right underneath that. Or if we break below 350, essentially any close below 357.50, then look for another big move to the downside, probably at minimum to 347. But I even think you come back if we look here at this pivot. This is kind of my downside target on the NASDAQ short term right here, right? This pivot high, and then see this little blip right here. And there's a gap fill right there. This area right here would be a perfect target for a retrace on the NASDAQ. All right, so that gets into that. Let's go to the gold chart. Gold, guys, I have been talking about this now for the last couple months, saying that don't buy the triple top. Wait for gold to retrace to about the 1900 level, 1915 level, and buy it. Well, it took a long time, but if you were patient and followed what I said, you got major alpha and you got to buy this here. All right. Now, again, look at the move up already starting. This should be the beginning of the next big move in gold. All right. Triple tops versus double tops. Let's do some education. Double pivot high. Here's your double top. Off of double tops, you get big pullbacks. Big pullbacks. Off of triple tops, which was right here, you get shallow pullbacks. Shallow pullbacks eventually lead to breakouts. Okay, especially when your macro pattern is bullish. Very clear this is a bullish consolidation up here from this move to the upside. So again, you're starting here. My guess is this is the beginning of a bigger move in gold. Not going to be straight up. I want to be clear on this. At this point, if you go to the 1970s, the movement in there, this is very reminiscent to the movement in gold. Remember, gold started slow. It started to break the recent highs, the all-time highs back then. It started to break up. It broke up. It was the last leg. That's the parabolic leg. That's where, again, my guess is where we're ultimately heading. All right. So again, just a little heads up on that. Gold again has likely made a short-term low and eventually will climb to the upside. Now let's look at silver real quick. And then I want to go to the 10-year yield, which I called for a breakout on out of the triangle or the wedge pattern, and then potentially a breakout going forward. Silver's having a good move today. Again, silver didn't quite get to my low level here, but nonetheless, we'll see. This still could be a bearish pattern. Let's watch to see how that plays out. I don't have much information on silver here in terms of a buy level versus gold. Gold to me was crystal clear at that level. GDX was a great play there, which we picked up as a verified trade signal in verified investing alerts. All of these things, guys, just beautiful stuff. All right, let's quickly look at the 10-year. And by the way, folks, I'm not even going into the macro data, but if you want to understand the macro data out there, watch the No Shill Zone with Ben Cowan and I on Mondays at 11 a.m. We go into the hardcore deep dive of all of the macro data. Now, this is what I was saying, guys. And there were a lot of people that are like, oh no, this isn't going to break out. And I'm like, dude, the charts are the charts. Here you had a bullish wedge pattern. Why is it a bullish wedge pattern? The bigger move was up. The consolidation was in the upper portion of the bigger move. So you had the micro pattern was bullish, and then you have a bullish channel as well. Okay, so the micro pattern already broke out. Now the macro pattern is looking like it wants to break out as well. What does this mean? It means the cost of capital is going to continue to rise if we get a breakout here. It means the Fed, I believe, is priced 86% chance they're going to raise in late July. So unless we get a weak jobs number, then maybe that would change at that point. But otherwise, you should expect a rate hike at the end of this month. In addition, by the way, folks, just to mention this, keep in mind, you have the Fed minutes today, I believe 2 p.m. Eastern time. So we'll get a little bit more insight from the Fed today at 2 p.m. Eastern time. That should be intriguing. My guess is the Fed does not like the stock market rally. They want to squash it. You might say, well, what the heck? Well, again, think about this. Housing data was strong recently. Why was housing data strong? Well, think about it. You had people that back in October were looking at their 401ks down 30%. They're now almost back all the way back up. They're feeling better about it. They're saying, okay, well, look at this. I feel wealthy again. I can maybe go out and buy a house. All right. Now, by the way, just the other day, I believe it was on Monday, we got the ISM data. All right. ISM manufacturing. It came in. And again, this is where we're getting a cross section of data. You had consumer confidence very, very strong. You had the housing data strong. The wealth effect stuff was strong. The ISM data, folks, was the weakest it was since May of 2020. It's a new cycle low. Now, why May 2020? May 2020 was 2 months after March, right? March, April, May of 2020 when COVID collapse occurred. So the fact that we're back to those levels is something that's a little bit alarming to me. And it does speak to a potential for a macro slowdown that is going to hit as soon as the labor market cracks. And I do expect the labor market to crack by year end, if not earlier. Watch out, be safe, be smart, follow the data, folks. It is your surefire way to avoid getting wrecked. That's all I'm going to say today, guys. You have been an awesome audience. Thank you as always. I will be back again next week to give you another game